Yo, what's going on? Been a while, but today I'm just gonna be doing a quick video of how I approach the market on a daily basis, from a top-down perspective. Just the whole, psychology side of it, and also just execution side of it, what I'm looking for on a weekly and, daily basis going into it. So, starting off, I'm just getting a read of where the weekly candles likely expand, right? So, as ICTs traders, that's the first thing that we get to be looking for going into a new week. We're always trying to look for where the next likely weekly expansion is, and if that's not clear, then it's low probability. And I'm doing bread and butter trades throughout the day. I'm not really trying to trade in the direction of the weekly range expansion, since I don't really know where the weekly candle is likely to go. So let's just say, for instance, right, let's replay this back to this week. So this week is the week of the 22nd of July, right? Let's just say before this candle printed, we were actually looking at this weekly candle, and we seen that, okay, cool, right? We just failed to expand, right? We had this previous weekly high, not closing above it here, right? This basically forms a large wick, and I'm anticipating price to trade back into the range, into range liquidity here, right? That got completed. And so now basically for the new candle for the weekly, I'm looking at where price could go, right? If we're gonna go lower. So I'm seeing, that price moves to imbalances and then to liquidity. We got to liquidity here, right? The next point of liquidity would be getting back down to, right, this previous weekly low, and then also this order block here. So this is the previous weekly low right there, right? I'm seeing we already closed below here, so I would be anticipating price to basically have a breaker type of setup, simply because we had a high, low, high, higher made, and now we're closing below. So anywhere within this range of this candle, looking for retracement for price to go lower, right? So that's the first thing. Going into the week, I'm looking for, okay, are we going to be bearish or bullish going into this week, right? Because I want to be trading in line with that direction, so then I can have a higher chance of winning with the trades that I take rather than losing. So after I have the likely expansion of the week, I'm waiting for then the weekly profiles to play out. So there's different weekly profiles. There's a Tuesday high of the week, Wednesday midweek reversal, right? There's consolidation, to late week reversal, different stuff like that. But let's just say I'm anticipating price to trade lower to this previous weekly low, and we have the first candle here, right? This is Monday. Usually, depending on the economic calendar, I'm going into this week, I'm seeing when the news is, right? If the news is more so towards later in the week, I'm expecting, okay, we could probably have like a Wednesday, reversal. That'll make the high of the week. If there's news, early on in the week, then anticipate price to basically have excitement to start off the week, and we can get some consolidation later on in the week. But it's really just basically pairing the economic calendar with where price is at on the chart and where it's likely to expand, so you can have the highest probability narrative of where price is likely to go. So we see that Monday usually creates a range, right? So, if I'm coming in on this day, I basically would not be looking to do anything, not a lot of info. I'm waiting for more, info with price, right? So again, I'm bearish on a week. All right, cool. So we see that Tuesday, right, we take Monday's high. So when this happens, I'm looking for intra-week, different signatures in price for reversals, right? Different signs that are reversals happening. This can be like some SMT between NASDAQ and ES, right? It can be basically that one takes the high Tuesday and another doesn't. That's going to give me further confirmation that, okay, this is a signature that shows that we could be getting a midweek reversal, right? SMT paired with like a key level, a higher time frame level, is very high probability for reversals. So let's just say, right, we're going into Tuesday, and we're looking to trade Tuesday, right? We have Monday high. So I come onto the market and I have basically on the 1 hour. This is like my main time frame that I'm using, right? I use the daily. The weekly, I'm just looking at, to start out the week. The daily I'll use, of course, I'll just refer to that every day to see where it closes, the key levels, previous day highs and lows, that type of thing. But the 1 hour, I'm an intraday trader and scalper, right? So the 1 hour is like my main time frame that I'm going to be using for like that higher time frame perspective to get my key levels off of and things like that after I go from the daily, right? So I'm blending like the daily and the 1 hour for that long-term perspective, right? So I have true day. So my day starts at 4 a.m., right? And my day ends at 3 p.m., right? So if I'm going into this day and I'm looking for a trade, a high probability trade will be one that is trading in line with the direction of the weekly candle, right? So we have, basically, I'm expecting price to trade lower. We have previous daily high that is right here, right? And I'm hopping on the market and I'm coming into the market at around 9:30, all right? But my first trade is not going to be till around 9:45. This is just what I've seen personally in the market, right? The highest probability setups for me come within that 9:45 to 11 a.m. time window. That's really what I've seen. My majority of my trades that play out that are high probability happen within that time. Not saying that there's not setups that happen before then, but that's all dependent on like the economic calendar, things like that too, right? So just looking at this day, I'm coming into the market, and right, my time's gonna be a little different for me because I use UTC -5, so I'll just change it real quick so you guys can see to New York. All right, so I'm coming in here, and we're just waiting for some more narrative, right, where price should go. So if I'm looking at this, right, when I'm going into a lower time frame from that 1 hour, it's like my long-term perspective, right? I'm going to see like, okay, what's the narrative? What should price do? Where are we at within previous days range, right? Are we in a premium or discount? Knowing the range that you're always within is so important, right? This is what I'm looking at on, basically this time frame. I'm looking back and I'm saying, okay, do we have any order blocks, any things like that are happening, right? That we're seeing, any levels that we could refer to act as a key level. How I view the market is like this. Every single day, it's basically like you have a battlefield that you are at, right? The battlefield that the market likes to play in between. There's going to be levels in the higher time frame that price will refer to that are going to frame the extremes of the daily range, right? Those will actually, those will be the key levels that the daily range is framed off of, right? And so looking at where price opens at, if you take into account that the market is run by an algorithm, you have to understand that there is a look back time, right? A look back period within the market that the market refers to liquidity, imbalance, that type of thing, right? So for me, I start my day out, basically coming to the market around 9:15, but I'm not taking a trade or anything until around 9:45 because I want to see what the opening range does. If there's no news, or if we have like news at 9:45, 10 a.m., usually we'll see is the first 30 minutes, the opening range will create inducement liquidity, right? It'll get people in the market because they're rushing to get in 9:30 open, and they'll basically just, try to build liquidity in the market before the real move happens after 10 a.m. So just looking here, if I'm going to this day, I'm seeing we have previous day high here, right? And we also have this candle right here. All right, it doesn't yet get to it. It doesn't touch the open, but it taps the low of this candle, right? This is the highest candle, right? Up candle that closed, right? With this body within this price swing before it expanded lower, all right? So this is the order block. So it comes to that low. So it reaches the previous daily high, and then above liquidity into an array, which is this order block here, the low of it, right? The open already got tapped, so it comes to the low right there, right? So I'll just mark this as bearish OB low, and then I'll have like the 1 hour, right? So that would be basically, if I'm looking back and we have this liquidity building up, I'm looking at that level, right, for price to come to, all right? Now when I'm going down to lower time frame, I'm also looking at the liquidity for sessions, right? So I have an indicator that shows me basically, if we're going to have seek and destroy day, if we're going to have, Asia liquidity here, London liquidity there. It's going to show me where the liquidity is, because that's where I want to be targeting. When we have London take both sides of Asia, right, that sets up a potential seek and destroy day. So this alerts me and lets me know that, okay, we could be looking for, a potential seek and destroy day that could happen in the market. And so I'll be looking for, not an extended price move, but a reversal or things like that to form at key liquidity pools. So price trades the previous daily high and basically expands right there. So the 1 hour is my long-term perspective, right, going to the market. When I'm going down to lower time frame, the 15-minute is like my intermediate term perspective. This is where I frame my swing points off of, right? This is where I like to see where like the main liquidity is, like relative equal highs and lows. ICT calls this his bellwether chart because he likes to do a lot of just, everything on it. He can execute off of it. He can see drawing liquidity, all that type of stuff. It's like the main time frame for intraday trading that people use. So I'm just seeing all of that here. So when we're basically trading above previous day high, I'm not seeing a lot of conviction right here to take a trade. Why? Because there's no displacement or anything like that. We're just in a big consolidation range, right? If we think in terms of power of three, you have accumulation, manipulation, and distribution, right? We want to be waiting for the accumulation to happen, then the manipulation to happen, and then take action, either on the manipulation or on the distribution. And so if I'm looking at this, I'm seeing that we have a consolidation range, right? And if I'm not getting a trade within that first time window that I was talking about, that 9:45 to 11, then I'm going to literally wait, because we could get a lunch reversal. That tends to happen a lot of times. So we see here that basically price, all AM session, price consolidates, right? Price consolidates here, all right? It's not really a lot of, expansion. And then price basically, right, starts trading higher aggressively. So when this trades higher aggressively like this is that manipulation. As you can see, it's just straight bullish candles, right? Just think of the psychology of people when we're looking at the market, right? If you see this huge run, there's going to be two types of people. People that try to buy on the breakout when it's breaking this high, like, resistance becomes support. I can buy this, right? And then there's also going to be people who are going to be trying to buy the retracements, right? People say, I trade ICT, I can check this last down close candle before the high move higher, right? This is an order block, right? But then it fails and they just create liquidity. And why does this fail in this sense? It's because of narrative, the higher time frame, what's happening, right? What's the weekly candle doing? What's the daily candle doing, right? Where are we likely to expand on the weekly time frame because of the weekly profile? All this goes into that. So this is just an inducement run lower. Then it takes out the liquidity, right, that's created above these highs when it's running lower, all right? And then it pairs that liquidity with that 1 hour, right, order block, and then also the previous daily high that we have there, right? So when that happens, basically, I'm seeing this as manipulation, right? Since we're trading to that higher time frame level, all right, on the 1 hour time frame, right, we are literally trading into this, the order block low right there. And what I'm thinking is, okay, we trade above previous daily high. I'm looking for price to trade right back into the range, since this is a potential seek and destroy day, right? And take out any liquidity that was formed before this, all right? And we have this failure swing right here. Okay, so literally, I'm looking at all the AM session lows and things like that we have right here from 8:35 that never got tapped. And I'm looking at that as a target, right? So as soon as we trade here, I don't have to really wait for market to shift, simply because within this structure, basically it calls for just a CSD, right? Change in the state of delivery. So when we change state of delivery from the manipulation leg, that changes the state of delivery from manipulation to distribution, right? From, basically manipulating liquidity to now a sell model forming and it attacking sell side liquidity. So when this happens, I'll basically, look to enter short right here. My stop loss is going to go above this candle high because this is should be a classical intermediate term high, right? Since we're actually taking out this liquidity into that higher time frame level. All right. And that's where my stop loss go, since I don't feel like that to get broken. And I'm targeting relative equal lows, sell-side liquidity, right? And that's the trade that I would take for this day. Why? Why is this high probability? Because 1, we're trading in line with the weekly candle expansion. 2, we're trading in line, with basically the daily key level that's getting hit. All right. We also have liquidity in the form of sell-side liquidity formed here that we're trading to. All right. And plus, this is a reversal. All right. When in lunch session, after aim session, sell-side liquidity is formed, and that's where we'll look to target. Right. That's basically all these confluences are making this a high probability trade, and this is why we should take this trade. So that's literally my whole process of how I go about everything. All right. I'm literally just waiting for, what is the expansion of the weekly candle, right? Is the daily candle likely to expand higher or lower in the direction of that, weekly candle? And then going into the lower time frame, okay, within AM session, because I trade the NASDAQ and there's the most volatility within the New York session, when am I looking to take a trade? Okay, depending on the economic calendar, it could be early on in the day or it could be later on in the day, right? And then going into technicals, more so accumulation, manipulation, distribution within the, the whole hourly candles, then you're going to be able to see things a lot clearer and see the trades, when they form, right? Because think of when this candle started. This candle started at 11, right? So right when the hour opens, it just starts trading higher aggressively, right? Think of how many people, like I said before, are just going to try to buy because it's expanding higher, right? But that new hour candle, what happens first? We accumulate, we manipulate, and then we distribute. So I'm expecting the power of 3 for this hourly candle, right, to start here, which is the open, the accumulation, manipulate higher into this key level, which is the previous day high and the 1 hour order block low, and then distribute lower for the next, hourly candle when it opens. And that's literally what I'm expecting to happen, right? And here's a little gem for those who watched literally, till the end of this video. What you want to be looking for on the higher time frame, the 1 hour specifically, is failure to expand above a previous hourly high, right? If we hit a key level like a previous day high or any key level, and then we also take a previous hourly high, but it fails to expand above it and it closes back below, that's a signature for reversal, right? Either a reversal or a deeper retracement is going to happen back into the range. So that is just something to note, right? You look at every time, price has hit a level, right? Let's just say here, we have this volume imbalance we're within. Not only do we hit the volume imbalance, right, the consequent encroachment of it, but we also didn't close below this hourly low. So whenever this happens, usually what we see is to start this new hour, which is with 10 p.m. here. I don't trade this time, but this is, what we would do, right? When this new hour candle opened, we would be looking and note that hourly low, right? When it trades below it, that acts as the manipulation. We're at a key level. We're expecting that to be the manipulation simply because we're at a key level, higher time frame level, right? So we have a higher time frame level, and then we have this internal range liquidity that's getting taken in the form of previous hourly low. So I'll go all the way down to the 2 minute, right? This, basically trades lower. Then we just wait for like a CSD, and we can be comfortable, right, placing our stop loss below this manipulation simply because, right, we already expect that to have taken out liquidity and hitting a higher time frame level. So where the stop loss goes, the large wick, according to ICT, we place our stop loss right below 50% of that wick. So for entries here, right, stop loss can be right here, and we'll be comfortable with that. And then we're targeting, the highs, relative equal highs, wherever we're looking at. Could be like a fair value gap and a premium of the range, but that's the trade. So literally this happens over and over again. Just a little gem. Wait for price to hit a higher time from key level, and then also take out, a previous hourly high or low while hitting that level. And that is really, really high probability for that reversal or deep retracement signature where you can execute off of, just like that. But yeah, I hope this helped you. Just a quick video going over how I approach the market. Just taking basically from a weekly all the way down to intraday, what you should be looking for, how you could just get high probability trades, on a daily basis. And yeah, so that's basically it. And I'll see y'all in the next one.